Gotten into the government shutdown inside. I told you back on October 14th that this is going to go on longer than everybody expects. I told you about 5, 6 to 8 weeks. Well, here it is, nearly 6 weeks. I told you it would be the longest government shutdown in history. I was correct about that. But the damage has been done. We just had the Treasury Secretary say late last week, Scott Bessent said that this is going to now impact the GDP by about half. So again, this is putting the final nail in the coffin to ensure we go into recession. Now, eventually, we're going to get the government reopened here with the government shutdown. The end to the government shutdown now in sight. Got to get these jobs reports in the coming days ahead, and they're probably going to be bad. As I keep saying, again, we're going to end up seeing negative numbers. If we don't get it immediately, which I think you got a good shot, we're going to see a negative number. But if we don't get it immediately, you're going to see it as we move into the new year. And again, had the recession start in 2007, Fed was telling us, oh, we're going to have a soft landing. By January, they panicked. We saw negative numbers associated with that top in 2007. And every number in 2020 or 2008, after the recession started in December 2007, every single number was negative. Hundreds of thousands of jobs being lost, negative numbers, and the unemployment rate surged. To see the same thing. Now, again, I talked about over the weekend, I talked about a rally back up. We're bouncing off the 50-period moving average. We got some gaps overhead that can be filled. I talked about it in great length and detail. That's what's happening. I told you it was likely to happen. Some people only have selective hearing. They only hear what they want to hear. I talked about a bounce. The Dow was up 381 points. The Dow up 381 points, up 0.81%. The S&P was up 1.5%, up 103, almost 104 points. The Nasdaq was up just over 2.25%. The Russell was up just under 1%, up 0.94%. The VIX declined by 0.7 or by 7.76%. Friday we had a topping tail on the VIX. We had a bottoming tail on the S&P 500. And I talked about the rally back up to fill the gaps, test the moving averages. We start the week off with our second red awesome oscillator bar in the weekly time frame. Again, we're bouncing off the 10-week moving average. I talked about this at great length and detail over the weekend. We're bouncing off the 50-period moving average. We have a confirmed reversal with their topping tail. Now we need a follow-through and a close below last week's low, either this week or next week, to take out the 10-week moving average and to get a bearish reversal of conditions in the weekly time frame. Getting the bounce that I warned about. We still have a bearish reversal of conditions with momentum. Bars have turned blue. Again, we've rallied back up to the 10-period, back above the 20-period, and to test the 10-period moving average. Moving back to fill the gaps, it still may not be done. We got the bottoming tail at the 50-day moving average here, bounced off of that 10-week moving average that I've talked about a moment ago. S&P daily right here. Same thing for the Nasdaq. And again, attempt to fill these gaps. We can see green on the awesome oscillator bars. We attempt a bigger recovery. We've rallied back up to the 10-period moving average, back above the 20, getting a gap today on the announcement that an end is in sight here for the government shutdown. You still have a bearish reversal of conditions, and the rally still may not be over yet. We still have gaps overhead. Nasdaq daily chart here. Second awesome oscillator bar, red awesome oscillator bar in the weekly time frame for the Nasdaq. We got confirmation to the topping tails. Now we need a follow through to take out the 10-week moving average, the red line, take out the lower boundary of the cloud. We need to take out last week's low either this week or next week to resume the decline. We've got these stochastics rolling over. We had a divergence in the most recent price action. The 10-week has been holding as support on Nasdaq and S&P. And we bounced off of it. And we bounced off the 50-day. You have to take those levels out to get a bigger drop. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel. If you could take a moment to partner with me and do that, I'd really appreciate it. I just put it all out there and ask that you do what you can to help out. So if you could take a moment, step up to the plate and help out, I really appreciate it. Most YouTube channels get sponsors. I turn those offers down. They constantly contact me. I don't want to sell you anything. If you ever get a YouTube channel, they bombard you, and I choose not to do that. So just follow the link below. It'll take you to a secured site, and you can donate any amount you want or make it a recurring donation. If you could take a moment to do that, I would appreciate it. I thank you for your consideration for that. We still have this Dow theory reversal signal in play between the Dow and the transports, and Dow hit that upper boundary of the channel. The topping till confirmation in the weekly time frame, just like the S&P. Now we need to follow through on both Dow, S&P, and even Nasdaq. We still have market breadth indicators warning of a reversal. Again, like stocks above their 50-day moving average, you likely won't see a bottom until we reach single digits like we did back in April. Seeing stocks above their 200-day moving average make lower highs. The S&P made higher highs, diverging again, just as we had right before the 2022 sell-off. Told you a week and a half ago with the Fed on October 29th that I thought we peaked at this upper channel line in the weekly time frame for Nasdaq and the one on S&P. That broadening formation, eventually I think this is going to play out, and I think by January be sharply lower, and that's when the Fed is going to panic. I think for S&P 500, S&P turned off of this trend line. Trend line from 2020, excluding the shadow here and excluding the shadow here in 2025 at the April low. You slammed into it, slightly overthrew it on the Fed day and turned off of it and got a topping tail. I think we're headed down either to the trend line or to the April low, one or the other. That's why I say 26 to 30% or so. When we see that happen, that's when I think the Fed will panic. And I think that will come by January. Here I've marked some support levels. If we turn down below the 50-period moving average, I've marked the different support levels, and the previous high over here, it's where the 200 is coming in the daily. Just looking at some of these different support levels once we break the 50-period moving average. Signals here for Nasdaq, still bearish, even though we got the rally back up. There are still gaps overhead, so I'll be watching to see what happens to the daily swing trend signals right now. Still bearish here. S&P 500 still bearish here. Nasdaq still bearish here. S&P still bearish here. S&P still bearish here. Nasdaq still bearish here. And again, there's still room for the rally to expand, and some of the signals will still be bearish. Others would flip back to bullish. So what we're watching is, do we establish a lower high, this rally, and then resume and get a lower low, resume the sell-off? The bottoming tail at the 50-period moving average. We've rebounded back up. Remember, I talked about all these gaps on the 60-minute chart. You can see it here on the daily chart. Another gap filled directly overhead. We don't have to fill these gaps, but I told you we could. With the bottoming tail, it was likely we're going to get a rally back up towards the cloud, the momentum cloud here, to try to fill some of these gaps. Not required that the gaps fill, but oftentimes gaps will fill. I have a head and shoulders very much in play. If this rally fizzles out, again, I'll be looking for a move back towards horizontal support at 65.50. Right now we're in backtest mode, and again, we may still overthrow the trend line here a bit, but again, we are in backtest mode at the moment, just above that 10-period moving average. If that is the line that is the line in the sand that terminates a rally, and again, be watching the 50-period. The 50-period is held as support. The trending cloud just below it. Under that, our 200-period moving average in the 6100 area. Our previous peak over here is 61.47, and our MACD tells us massive divergence on it. We had that breakout of the bullish falling wedge on the 10-year yield, and the yield had already bottomed, and the stock market topped after that, which is often the case. Bullish divergence here suggesting we're going to see a surge in yields, which tend to have a negative correlation with the stock market, so don't rule that out. When we saw the sell-off in 2022, the yields surged with the bullish divergence like this. These other bullish divergences led to surges with the 10-year yield. It doesn't always have a negative correlation with the market, but more often than not, it does. If you see it surge, we might get Jamie Dimon's crack in the bond market that I talked about in great length and detail over the weekend. We saw the S&P turn off the upper Bollinger Band, forming a hanging man candlestick. It did get confirmed. It did get a follow through. Now we're watching to see, do we get a lower high? Got a possible head and shoulders if this sells off down towards the neckline area here. There's a 100 period moving average, horizontal support, and the cloud of support. Going to be watching for a pushback above the 200 period moving average if we're going to come back and fill some of these gaps, which I told you I thought was likely, and that's happening. Directly overhead is the one over here at 68.52. 50 got back above the 200 period. Shorter term time frame, the 15-minute chart's forming a negative divergence. It might form a multiple point divergence if we still get a larger retracement. Try to fill the two gaps overhead, or at least one of them. But right now, overthrowing that 200. The 50 is still below the 200 here. So again, be watching to see if the rally fizzles out or goes a little bit higher and fizzles out. But you do have negative divergence for the short term here, but it might evolve into a larger multiple point divergence. Told you over the weekend we can go up to these clouds, to the cloud here in the 60-minute time frame. That's what we've done, and we've stalled there. Just directly overhead is the gap fill at 68.52. Another one at 68.92. Again, these gaps don't have to fill, but they could, as I've said. And again, I talked about the gap and trap down here on Friday. Now we get a gap and go today, gapping higher and then going in the direction of the gap. So I'll be watching to see what happens here. We've now come back to fill some of these gaps. We still have the head and shoulders very, very much in play. May end up seeing a divergence develop on the RSI before we see a bottom coming down here towards horizontal support, towards it, to it, or just beyond it. Could even see a divergence develop on the MACD before all is said and done once we start resuming the decline. I still think by January we're going to be down, testing the April low just above it, or right at it, or just beyond it somewhere, but 26%, 30% lower by January, and that's when I think the Fed is going to panic. Right now, we're bouncing off the 50-period moving average. Russell broke down from that rising wedge diverging with the S&P 500. It's now rising back up to the moving averages. The 10 has crossed the 20 period on the Russell. It's likely coming for the S&P. Sorry about that. I had to cough. Recently had surgery, and I'm recovering right now. I apologize. I showed you as the S&P is rallying up to the 10 period and the cloud here, the momentum cloud. The cloud in the 60-minute time frame. The Russell is rallying up to the 10 period as it's already crossed the 20 period moving average. And again, stalling at the momentum cloud. So we'll be watching what happens. The Russell got a hanging man candlestick today. We got that topping tail with the gravestone doji just over 2 weeks ago there, and again that was confirmed. Now eventually we need a follow through to take out the 10-week moving average, but I told you to expect a bounce off the 10-week and the 50-day moving average and to fill some of those gaps. We've seen this nice looking divergence develop on the stochastic in the weekly time frame. It's just above 80, and if we start seeing this rally fizzle out this week or next week, we start confirming this candlestick either this week or next week, I expect the stochastic's going to drop below 80 here in the weekly time frame, and eventually that MACD will percentage index drop below 50 a week ago, and it's remained there. Again, when you drop below 50 and we're consistently in negative territory, we had the 21% sell-off from the February high in 2025 down to the April low. And again, seeing the same thing, the same weakness. And this is the bullish percentage of stocks that are in uptrends or downtrends on the S&P 500. The divergence with the S&P 500, now it's gone negative, low 50. And that's what we've seen with other sell-offs. We saw it over here as the diversions formed. We saw it over here after the diversions began to play out. But it's pointing to weakness on the S&P 500 like other market breadth indicators. We had the VIX form a topping tail as the S&P formed a bottoming tail at the 50 period. The VIX is still above the 50 period, but pulling back and allowing the S&P to go up and fill some of those gaps and test the 10 period moving average. Once the rally is done on the S&P 500, I'll be looking for the VIX to get back above the 200 period. It's stalled at the 200. Still the MACD in positive territory. We're still above the 50 period moving average, and the bands continue to warn something big is getting ready to happen. Nasdaq coming back again. We had a gap and trap on Friday, got back above the 200, back above the 50, back to the cloud right here. You've got gap filled directly overhead. These gaps again may or may not get filled. Reached extremes on the RSI, and we're getting this rebound back up to the cloud of resistance here in the 60-minute time frame. Nasdaq 100 is up 2.20% of 551, almost 552 points. If we see another sell-off down here towards the October 10th low, I'll be watching for a potential divergence towards this area, to this area, or beyond this area here on the Nasdaq. Again, you've got the same potential head and shoulders in play, and likely just the counter trend to go back and fill some of these gaps. And we're filling the one right here. I didn't mark it right there, but you can see right there. We filled that one today, just under gap resistance right here. So again, I'll be watching the gaps. I'll be watching the cloud here in the 60-minute time frame for the Nasdaq. Nasdaq broke the trend line, but getting back above it here in the daily time frame, stalling at the 10-period moving average. Got the cloud here in the daily time frame, the momentum cloud. Again, here's our bottoming tail at the 50-period moving average. Again, is what I'll be watching for, is if we come back and tag that or test that October 10th low. I think we're going to do that, and if we do, I'll be watching to see if these 10 and 20 periods start getting the bearish cross. I did warn with the bottoming tail, with the bounce off the 50, the bounce off the 10-week moving average, to be watching the moving averages, to be watching the moving averages for a test. Watch the cloud here for a test. Watch the cloud. 60-minute chart, we're testing that right now, and watch the gaps. They're likely going to attempt to get filled, or at least a couple of them. Got this massive broadening formation on the Nasdaq. We broke the trend line here, but getting back above it with our rebound back up. As I've said, you still have this massive divergence on the MACD, turning off the upper channel line on the Nasdaq, as I've talked about, and the S&P 500. You're watching if the weekly stochastic breaks 80 this week. Again, you've got the negative divergence in place on it, as well as the S&P 500.